Interest rates, are they going up or are they going down? Today we'll look at the bond yields in the US and Canadian markets, and to do that we'll look at the 5 and 10-year bond yields to try to develop some sense of where the bond yields could be going, and in turn, interest rates will go as well. My name is Trent Klarenbach with Klarenbach Research. Today is May the 22nd, 2025. And the first chart I want to show you here is the Canadian 5-year bond yields. Most of our readers and listeners and viewers are in Canada, so this is where we'll start. And take a look at this 5-year bond yield chart. Now, I've been waiting patiently to publish some content and some analysis of the bond yields, but I really haven't had a good sense of where it's going here. And I've been talking about this since January and February, and I guess a few people have been waiting for some analysis. But here we are today, and this is the weekly chart, 5-year bond yield. So if I look at this, I see a possible head and shoulders pattern with the left shoulder ahead and a right shoulder here. I drew a neckline down here. The neckline could probably be drawn up here as well. But really, if we want to see if we can stay above this yellow trend line, if we break below that other trend line again, then I anticipate the yields will drop, and thus the shorter term interest rates will as well. But take a look at this here. We're finding some support from this trend line, I guess you might say. And then we're also testing this purple 200-week moving average. And you can see here this green 50-week moving average is crossing below, or is about to cross below the 200-week moving average. This is what they call a death cross. And usually what happens, or I shouldn't say usually, but what we anticipate will happen is when the price action is near that intersection of those two moving averages, then often you see a sell-off and lower values in the future. So remains to be seen if that's going to happen here. But right now we're testing this key level, and we want to really keep an eye on this key level. This gap looks like it's been filled here. If that's how you trade off the gaps, but it's a very critical level for me. We saw a really rapid rise in the bond yields here this week with, I guess it was disappointing demand in bonds. But so right now, this uptrend is still intact. We are trading below this 200-week moving average though. So I really want to, it's really tough to see get an idea where the bond yields are going, in turn interest rates. Now the 10-year bond yields is telling a bit different story. We can see here that again, I see maybe a head and shoulders pattern forming here too, and I drew a neckline here. We found support from this 200-week moving average. And since then, we had a couple tests there, 1, 2, maybe 3 different tests on the weekly time frame. And now we're back trading above this green 50-week moving average. Now it's an interesting level. We have a fib level here overhead that's been acting as resistance. But these bond yields are in an uptrend, meaning the trend is higher, and in turn, interest rates as well. So you really want to keep an eye on this. We're trading at 337.50 right now. If we get above, make new highs over 350, then I will develop stronger conviction of the continuation of this uptrend. I haven't ruled out the head and shoulders pattern yet. I don't think it's been confirmed in my opinion, but we want to keep an eye on this. Right now, the trend is still higher, so we can anticipate, I guess we want to lean towards higher interest rates on the longer term loans and mortgages. This here is the 5-year government bond yield again. And yeah, this is a weekly chart, and right now it's above that green 50-week moving average. Similar patterns, head and shoulders patterns, what I identified. We'll see if it gets completed or not. I drew this trend line, it broke, got retested. We've talked about that lots in the past. These trend lines, once they're broke, they get retested. This took from July 24 to January 25 to retest, but nonetheless, we anticipate that will happen. This purple 50 or 200-week moving average is still rising. We haven't tested that yet. It's going to be interesting to see how this all plays out. But again, this on the longer time frame, this bond yields remain in an uptrend, signaling the likelihood of higher interest rates. The 10-year bond yields is, I guess I'll say, bullish from the fact that it's rising and it's in an uptrend. It's actually showing similar strength as the Canadian 10-year bonds as well, which I guess if you study the bonds, you can probably realize why that is. But again, we never did break this bottom trend line. We're finding some support here from this green 50-week moving average, and we've had 4 weeks of rise off that test. Now, This again, this is in an uptrend, and it's suggesting to me the trend will continue, and we can expect higher interest rates in the future. Higher bond yields equal higher interest rates. So if you are refinancing, if you are about to make some purchases, and you need to make a decision over variable or fixed rates, you really want to pay attention to these bond yield charts. And right now, we have to lean towards higher yields and higher interest rates. My name is Trent Klarenbach. Sunny in Saskatoon. Life's good.